we are here as day 2 as the IPR event, which has been organised by RemitONE. It's really in support of the innovation in payments and remittances industry. IPR has been created to bring together global industry stakeholders, visionaries and business leaders to make informed decisions and drive positive change. Now, today you'll hear from prominent speakers from across the industry on a range of topics as we aim to discuss, share best practices, engage, learn, discover, create opportunities and shape change. Now, the organisers behind the event are RemitONE, an award-winning UK headquartered fintech firm providing a range of technology products and services to the money transfer, foreign exchange and payment industries. Now, their mission is to empower the global money transfer industry and provide fair transfers for those who need it most. So you can see IPR is really an extension of this mission, and we're delighted to have you here today to be a part of that goal. I would like to extend a special thanks to all of our sponsors. Let's see their wonderful names on the screen, without whom this event would not be possible. So please make sure you have a chat to them during the break. And for those joining online, please do click on the link where you can actually have a virtual session with them via their booth. And you can engage with them there. So thank you so much. Now to our very, very first panel. It's about building operational resilience in the digital industry, security, KYC and compliance. Now, increased concerns around digital ID and security and a shift to a more digital money transfer industry have resulted in a whole host of new security features and challenges. Now, here you can learn more about how the remittance industry is tackling compliance, AML, KYC, and more in this panel session. Now, I'm really pleased to introduce the panelists. So first we have Kathy Tomasofsky, who is Executive Director of Money Services Business Association. She's held various senior systems management level positions at the Network Branded Prepaid Card Association, USF&G Insurance and First National Bank of Maryland, and was an advisory board member to the International Association of Financial Crimes Investigators. Let's hear it for Kathy. Next, we have Ibrahim Muhammad, who is a highly passionate payments professional with a 20+ years of experience in money transfers, prepaid card payments, and covering various areas related to operations, technology, compliance, product, and business development. Now, Ibrahim is an independent payments consultant providing specialized consultancy in the space of payment innovation to startups and incumbents. Thank you, Ibrahim. Next, we have Nadeem Qureshi, the CTO, co-founder of USI Money, which is a fintech payment services provider. Now, Nadeem has developed a wealth of experience over his 18 years in the payments industry, working with both private and public companies, providing business support and services across Europe and the Middle East. Welcome, Nadeem. And finally, Richard Spink, who's the Sales Director for Channels and Partnerships at GBG. Richard is part of the business development team and looks after channel partnerships. He's worked for the last 12 years in ID with GBG and Experian. Prior to delivering global ID verification partnerships, he worked at American Express, and he would love to have played for Brighton Football Club as well. Let's hear it for Richard. And last but not least, our very wonderful moderator, Oussama Kseibati, the head of sales at RemitONE. Over 15 years of experience in the industry, offering UK and Europe licensing and remittance software globally. Oussama's company RemitONE is leading in the field of innovation and technology, bringing supply chain members together from around the world to build bridges and connections. So let's hear it for Oussama. Over to you.
So my first question is going to be to Nadeem. What are the key pillars of operational resilience?
First of all, good morning, Oussama. It's indeed a pleasure to be here amongst you all today and my fellow panelists. I think just before we go into the pillars, I think it's important to just recap or go over what is operational resilience. So it's effectively an organization's ability to deliver, adapt, and adjust to ensure that critical operations are delivered through disruption. It's not your business continuity plans and your disaster recovery plans, or not just that. If you are to create or expand on some risk scenarios or shock scenarios, some of the steps that you would take in Operation Resilience would be prevention. So what can we do to, first of all, prevent that shock or that business interruption from actually happening in the first place? After that, you would have robustness. So if we do experience a shock, we must be robust. We must minimize the risk or the interruption. Another would be recovery. Again, if the unfortunate happens and we are experiencing business disruption, we need to be able to recover quickly, adapt, and effectively come out. Another would be adaptation. So recently, with COVID, there was a business shock, there was a disruption, and there was a new norm created. So we must be able to adapt with the new norm. And finally, learning. We need to learn from that experience. We need to be able to then become more resilient than going forward.
For that. Ibrahim, same question to you. What are the key pillars of operational resilience?
Adding to Nadeem's definition of operational resilience, it's basically the ability of all the firms to ensure that they're ready to, adapt to any sort of unforeseen situation and be completely prepared. And when we talk about preparation, it's all about the business processes. Again, depending on their business type that they are into, and to ensure that they are able to respond to any unforeseen events by having proper measures in place, and of course through identification of business services and ensuring that they cause the least disruption to the participants in the ecosystem. And of course, even from Financial Conduct Authority's point of view, also they are looking at firms to be having a complete framework in place which protects consumers and also ensures that there's a proper market integrity, and especially those which are vulnerable customers to them are being protected in case of any sort of shock events.
Okay, brilliant. Thank you very much for that answer, Ibrahim. I'm going to actually stay with you, Ibrahim, and sort of a follow-on question. Why is it important to have operational resilience?
Well, operational resilience has in fact become much more important after the pandemic because of the sudden shift of the firms, people working from home, loss of resources, So this has led to, of course, an extra sort of checks and controls by the regulatory bodies such as FCA to ensure that the firms are ready to handle such sort of situation. And because this was something which was completely unplanned, it came as a shock, globally, not just, to a specific jurisdiction. It becomes now the responsibility of the firms to ensure that they have the right measures in place. And it covers various things. It covers customers, employee safety. It covers, the systems in place. It covers all the processes in place. So it's all about, of course, people, processes, and technology that needs to be addressed as part of the overall operational resilience.
Excellent. I'm actually going to go over to you now, Kathy, with the same question. Why is it important to have operational resilience?
So I would add on a little bit to your both information, is that it really helps the companies to be so adaptable. One of the things that we saw in the United States with companies having to go remote was things as basic in terms of their operations was how to communicate with email. Because you have all these malware viruses out there, you have all of these scams. So establishing procedures there in terms of how to communicate with the regulators, with the customers, and with the business was key, which I would say I'm not certain that many companies addressed that minute detail in their business continuity plans, but that was, to your point, adapting and creating new procedures are important. So it does help us to continually evolve our businesses safely, I think. would be my thing.
Okay, excellent. And same question for you, Nadeem. Why is it important to have operational resilience?
I think one of the things that we don't really maybe understand correctly is operational resilience is just actually good business practice. It's not just a regulator-driven initiative. It's something that is not just for the financial services industry, across any industry, if not every, most. It's just good business practice. It should be incorporated as part of your ERM, your enterprise risk management. And effectively, if you were to follow the steps, you would realize that when you're actually creating, building, introducing anything new, if you follow those steps, you're only going to make your life a lot easier later on in terms of really risk assessing. I'm about to do this. Is it the correct method? What are the potential risk scenarios, etc.? So, in effect, it's actually saving you money in the future. Good business sense because you've sort of mitigated for that risk in advance. So it's actually a fundamental key part. And furthermore, it actually touches on every department within an organization. So it's not just a compliance thing, or it's not just about tech. It touches every single aspect, within an organization. So, I mean, if that's not enough, I don't know what is.
Brilliant, thank you so much for that. Sticking with you, Nadeem, what challenges do firms face in developing the required framework for operational resilience? Post-pandemic scenarios, if you can as well.
Perception. I think perception, again, there's this perception that we've come out of COVID and the regulators are, pushing this new initiative. It's not really a new initiative. I think it's being re-highlighted because of the pandemic and because of the shock. I mean, we have to remember, in my lifetime, or I'm sure in anyone that's present here, we've never gone through anything as big as the pandemic. So the FCA was one of the first regulators to take a lead and introduce guidance, and then we saw that trickle down across all the various other regulators in jurisdictions. So perception is one, that it's not a new initiative. It's not just a regulator-driven initiative. The other thing is we see two sort of extremes. I think one extreme is people that would understand or interpret operational resilience as just a rebrand of your business continuity plans or your disaster recovery plans. That is an integral part of it, but it's not just that. So they would just rebrand it and then we file it away again, in the office cupboard with all the other policies and procedures. So that's one extreme. The other extreme that we have is, we need to create a whole new department. This is really big. We have to put multiple resources and really invest a lot of time and money. Whereas actually, it's more of a build. So build on your existing policies, work with them, improve them, and then create stages, sprints, so that over a period of time, you get sort of the whole 360 robust operational sort of procedures and policies. So that's one thing that needs to be done. Some of the other challenges sort of, I think, include stakeholder and management engagement or buy-in. So one of the things we must do as owners or senior managers or board members is to really believe that this is a priority of the business, and it's actually part of our ERM. It's actually a fundamental part of our business going forward. The other thing I think we sometimes struggle with is really assessing third parties. What are their risks? How would those risks or processes affect me? We don't really do that, so that sort of delays implementation. And also, finally, maybe our own technology. What do we have access to, or what are we working with? And then to make sure that that is also robust and that it's sort of future-proof.
Excellent. Nadeem, same question for you. Sorry, Ibrahim, not Nadeem. I've just Nadeem. Ibrahim, what challenges do firms face in developing the required framework for operational
what
resilience?
I have experienced is after the pandemic or post-pandemic, firms had to struggle a lot because there was a sudden shift in, the whole way the business is being conducted. Again, loss of resources or key resources, inability to serve customers the way they used to serve through their offices. So these are some of the key challenges that firms have faced. And apart from that, of course, then the financial constraints that further adds the burden to such firms to cope with the overall operational resilience. And as also Nadeem pointed out, there are requirements in place from regulatory perspective that needs to be addressed, which adds further operational burden to the firms, which needs to be addressed post-pandemic.
Brilliant. Thank you very much for that answer. My next question I'm actually going to pose to Richard. What is digital ID? Why is digital ID necessary? How does it impact KYC and AML?
Thanks, Oussama. Morning, everyone. Nice to be here again. That's a massive question. What is digital ID? How does it impact AML and KYC? I'm repeating it because there's a lot there to unpick. A digital ID in simple terms is confirmation that you are who you say you are. So increasingly, are you that person who's behind their phone, tapping away on the device? Is that you? Can we answer that question? As far as AML and KYC are concerned, the simple answer to that is KYC is an acronym, Know Your Customer. So it's answering that same question, but it's not answering it to the extent of actually having to confirm that you are physically completing the application for the service that you're looking to use. It's just confirming that the details you're submitting exist and appear to check out with what you're trying to buy. AML is taking that a stage further and complying with regulation. So when we talk about an AML check, we mean from a regulatory point of view, have you confirmed that you are who you say you are, and have you checked PEPs and sanctions lists to confirm that you're not a financial criminal and you're not politically exposed in a way that would impact your ability to use the service or influence how the service is delivered. So the vast bulk of MTOs are running AML checks on individuals to comply with regulation. But there's a crossover in that process because digital identity is something that's people are talking about more and more. There are more and more digital identity programs, but it's very, very disparate. And digital identity as a topic is tied up with politics. So if we look at countries where digital identity is live, we can look at countries like, or good examples are Estonia. It's also used in Sweden as well. And there are other examples. I'm sure there's someone here could tell me about countries in Africa where digital ID is potentially working. But it isn't working in the UK. It's not working in the US. There isn't a political will currently or political environment to try and make it work. But the idea behind digital ID, and I know there's a conversation on blockchain this afternoon, which is a good example of how this all ties back together, is in theory in the future, if you want to sign up to use Nadeem's service, you would just present your AML token, which is part of your overall digital identity. And your digital identity is a token that says, I am Richard Spink, I am 51 years old, this is where I live, I'm allowed to drive, I'm allowed to do things that people over 18 are allowed to do, but I'll only share with you the piece of information you need to allow me to do that stuff, because I know that there's a vault of information there confirming that all of those details are still correct. Does that help?
Yeah, absolutely. Thank you very much for that answer, Richard. Kathy, same question for you. What is digital ID? Why is digital ID necessary? How does it impact KYC, AML? And if you can use case of national IDs.
So I'll say, I won't define it because I think Richard did it really well, but I'll just tell you about what's happening in the US on that. FinCEN, which is our financial crimes enforcement network, back in April had a tech sprint with 8 companies, and they just released the results in September on this topic. We are in the first step of identifying companies that can determine the effectiveness of the digital ID. So I think that demonstrates we have a bit to go, and it is something that the Assistant Deputy Director Kirby is committed to. He thinks that digital ID is important in order to secure financial services in the future. But I think that the fact that it's capturing so much data, and who is going to own that data, how is it going to be parsed out, is a very, in our situation too, political issue. You know, there are people that don't want to share data and don't want the big companies, the big tech companies, to have access to that. So I think we're a good ways away, especially in the US, because of that. But I think that it is something that they recognize that we're going to need in terms of maintaining effective AML programs as we move to more digital transmission of money.
Yeah, absolutely. And should we be worried about a collection of this data with these firms, or depending on who's going to own the data?
So I would say that that's a hard one. It's hard not to inject personal opinions into that statement and stay objective. That's what I'll say on that one. I do think that some form of data collection is helpful and necessary. You know, I'll say people at higher pay grades than me have to help make those determinations in a collaborative way. I think that that's really what happens, at least sometimes, is that you have the technologists and you have the regulators over on separate sides, as opposed to bringing that group together to be able to share and solve situations. I always say, you know, we should bring in some of the fraudsters and the hackers, because they have these brilliant minds and can get at things that, you know, people say that no one can ever get to, and they do. So, you know, how do we channel that energy to positive viewpoints?
Absolutely. My next question, I'll go back to Richard to start off with this one. How can we simplify KYC IDV checks for key players in the remittance industry? Does social media come into play?
Simplifying it would be, digital ID would simplify it. You know, that's the one-time creation of a digital identity would then in theory simplify it. Because once you've got your digital identity, you just don't, as a business, you go, I just need that token that tells me this person is okay to do business with. So, but the other thing that you need is regulation. Regulation around the world is very, very different. I was talking last night, and you know, in the UAE, I believe you know more than I do, Ibrahim, about this. There's this scheme now apparently where the facial recognition is tied into the government ID. So, you know, if you walk into an exchange, your face is already starting that KYC process before you've got to the front desk. So AML and KYC in principle is simple. It's proof of ID, proof of address, am I a money launderer, am I politically exposed? It's answering those questions, but every regulator appears to want to do it in a different way. And then what you have across Europe certainly is a very fragmented system where in Germany and in Spain and in Italy, they like to use video, capturing video conversations to confirm identity. And while it's quite a secure way to capture identity, it's not remotely scalable because you've got to run a call center to keep that process going. Again, the process in the UK, US and Australia is very different. It's a data-driven process because that's quicker and it's less friction for the consumer. So these are complications in what essentially is the same process that regulators want, is to make sure that you're not facilitating financial crime. And collectively, as Kathy said, if tech and governments work together, the solutions are already there. But it's whether collectively, equally, we all have the, I guess, the will to trust that it will be delivered effectively, and with, you know, and in the confidence that your details can't be changed.
Thank you very much for that input, Richard. Very useful. Nadeem, same question for you. How can we simplify KYC?
How do we simplify KYC? So I think Richard touched on some very good points. In today's age, we have a situation where the customer user experience expectation is only rising, and that's also because of fintechs, how they're pushing boundaries. That then creates a need today. So obviously with the slow evolution of digital ID implementation, we need to think about what we can do and simplify today. One of the things I think we do is it's not just about, and this is if it's not already implemented, is with the biometrics, we have voice, iris, fingerprint scanning. But there's also sort of the other new trends, which is the social media biometrics. There's also things like semantic analysis, which is more AI-driven, and more of a customized way to onboard your customers. There's also things which are slowly becoming more available, sort of via open banking, APIs in terms of for verification. Also, I think at the moment we just need to go back. We should review our procedures. We need to also separate SDD and EDD. You know, what's simplified due diligence and what's enhanced due diligence, and which one is required at what point. Are they really required always at the same point? Because I think sometimes we make a mistake and we create these blanket questions, which is, you know, not really anything maybe to do with my particular sector or my needs. And we go over and above the regulatory framework sometimes, not all the time. I'm not asking anyone to go below, but sometimes we do go really over and beyond. So simplifying is look at what you're doing at the moment, and only implement the necessities or the questions that you really need to onboard, or in terms of IDV, in terms of accessing your touch points or portals if you are a digital player. And once you do that, you'll actually see that there's quite a lot of things that you can change and amend. So I think if we go out with the mindset that we're more agile, and you know, we're within the framework, but how do I decrease my, whether it's onboarding, monitoring, how do I go real time? How do I integrate or automate my processes with the likes of GBG, for example, that have mature systems that are very robust, so that I'm real time, and that I can deliver as per sort of the customer expectation. So I think we need to work with what we have today, and we're hopeful that these sort of new innovations or sort of trends, I would say, they will mature. Some will fail, some will succeed, but just to be a little bit more agile, I think, in our approach, and really look at everything, review your procedures again, and really look at, is it necessary today and now? It maybe was last year or the year before, but today maybe it's not the case.
I would just like to add one point here about simplifying the KYC. What we have seen in some countries like UAE, for example, they have taken very good measures in terms of simplifying the whole process. So once consumer is a resident in UAE, he gets an Emirates ID, so he can enroll with UAE Pass. They can just download the UAE Pass, which is government-driven initiative, and they can just register one time, give all the registration details. And once that's done, then they can use the same credentials to sign in with all these service providers, whether it's public or private. So that makes, you know, the life of the consumers much easier. You don't have to do KYC every time, you know, you're using a different service. And then going forward, of course, from UAE perspective, they're also trying to further simplify this by just means of biometric recognitions, which can further, you know, simplify. And that will also address the data privacy, the data storage issues, you know, within the jurisdictions.
Thank you very much for that, Ibrahim. We've spoken a little bit about the KYC IDV. Now we're going to go over to the AML side of operational resilience, and this one's for Kathy. What are the key factors to consider when developing an effective AML program for MSBs?
So I'll speak, I think, more from the US perspective and what our requirements are. So recently, actually this summer, we announced AML best practices, which was an initiative that we undertook with several other trades, unions, Western Union, banks gave us input. It took us 4 years and 31 versions to get that to a point where everybody said this is this is good. This is a great baseline for you to begin to use. The four main components that they sort of detail out is first and foremost, to designate a singular BSA, Bank Secrecy Act AML officer. You have to have somebody who's in charge of your programs. That person has to have the support of your board and act independently. They can't be influenced by marketing who might want to, lean one way with a particular product for the benefit and not look at some of the areas there. Second is, we talked a lot about establishing policies and procedures, onboarding procedures, review procedures, what is your suspicious activity reports. When we talked about the nuances in terms of your simple versus extended, what are those? Have those documented. We see a lot of people do go for more enhanced due diligence just because they feel that they're protecting themselves. Recently, I think in the last 18 months, FinCEN issued some requirements about your SAR reporting, your suspicious activity reporting, more FAQs and guidelines to pretty much tell companies, let's not do defensive SARs. Let's not, just be issuing them just in case. We want legitimate ones, and we're going to support you. So that's hopeful. Training. Here in the U.S., we're seeing a lot of turnover, especially post-COVID. You have to remember that what your individuals had known may be gone. You've got to make sure that you revisit your policies and procedures. We talked a little bit about this Operation Resilience and all the components there. Have you introduced that into your AML procedures is important. And then finally, you have to have those policies and procedures independently tested. That can be, some of our large companies use their internal audit function. It doesn't have to be an outsider or a third party who will come in and test your procedures, but that is effective and it's important. In the US, the state companies, when they're doing your examination, for example, will ask for the results of your independent review. So some states literally, as part of your licensing process, require and must see that exam. So those are sort of the 4 key points. The last one I'll say, some people say in the US it's the 5th pillar. It's a pretty controversial one, is whether you know your customer's customer. The whole beneficial ownership identification, that's the responsibility of the financial institution. Some say that that's being pushed down to the money service businesses in order to have that and maintain that bank account, but that is not one that's, it's not a regulation, but it's one of those items, I'll say, that's sort of on the books that people should be aware of from our perspective.
Thank you so much for that. Can I move over to my next question, which I shall start off with Ibrahim. What are the measures that money service businesses need to adopt around cybersecurity, e.g. incident reporting, timeline processes? What are the guidelines in the US? Oh, sorry, that will come on to Kathy. So just for you, Ibrahim, first part, what are the measures that money service businesses need to adopt around cybersecurity?
So, I mean, I will talk from UK's perspective specifically. So when it comes to cybersecurity, obviously, and again, tying up to the operational resilience, what FC expects is looking at the whole incident management process you have in place. So if at all, first of all, incidents occur, how are you able to identify, the incidents, whether you have systems in place to identify that, and how do you classify those incidents? And again, there are given guidelines from FCA of differentiating between minor incidents, major incidents, and then after that, what is the kind of turnaround time you have, to respond to such incident. Now, responding means not just responding to FCA, but responding even to your affected parties in the ecosystem, could be the consumers, could be the service providers, and also reporting any sort of incidents to the other authorities like ICO if there is a breach of data. So again, everything around data security has to be addressed by the firms, and which means, you know, right from encryption to storage to transmission, everything needs to be secured in place, you know, to prevent any sort of major incidents. But even if major incidents happen, then how do you take an action and how do you address it within the given turnaround timings, which are laid down under the guidelines of PSR and EMRs.
Okay, brilliant. And same question to you, Kathy, but on the US side.
So that's an important topic, and one that we encourage people to approach as a risk assessment, similar to the topics that we've discussed you know, before. When you do a risk assessment on your business, you know, identify the threats that may be coming towards you. I have notes on this. You know, what are the events? What are the sources? You know, depending on what you're doing, your third parties. What are your vulnerabilities? You know, the vulnerabilities now that we're more remote, your employees, your call centers. Determine the likelihood of your exploitation and determine the probable impact. And then based on that, look at your risk, which is a combination of the likelihood and the impact. So you come and, you know, a small agent, for example, is not going to have the same type of controls in place that a large organization is. And I think the risk assessment is appropriate to be able to help people know how to deploy limited resources and costs, which are a big factor. And, you know, it also then demonstrates, in our case, we always want to demonstrate to the regulator that we have had this process in place. So even if you have an event, you have demonstrated to them that you looked at it, you assessed it, and you should minimize then the effects from what they will see to you.
Brilliant, thank you so much for that. Going over to Nadeem now. Nadeem, what are the main challenges facing MTOs regarding compliance and regulation? I know this tends to change depending on which year it is, but so at the moment, what are the main challenges facing MTOs regarding compliance at the moment?
So that's an interesting one. I think I wouldn't say maybe challenges, but I don't think that we allocate enough time outside of the operational compliance space to really investigate and see what's happening with all the shifts that are a lot more fluid than they were a couple of years ago when things were a lot more stable. So I think we have not necessarily a resource issue, but a time allocation issue. I also believe that we do not review our sort of policies and procedures more periodically. I think we're still on, maybe a lot of us are still on that annual quick read, few updates, and again, file it back into that nice cupboard. So, you know, you need, again, because the situation is so fluid, with sort of wars, regulatory updates, market updates, cybersecurity issues, new initiatives, that creates an element of a need to change and update a lot more, I think, again, periodically than maybe annualizing it. So again, we need to make it a part of sort of the company priorities. Also, again, personal opinion is third-party audits, which I find a very useful tool to have somebody to come in and look at what you're doing at the moment, establish you know, where you are and where you need to be. And that creates for us a form of a gap analysis. It creates for us a really good framework and a really good indication as to where it is that you need to slowly start to work towards. And that gives you also a third-party sort of perspective Also, there's a lot of things happening within the markets where you have key supply chain members that can actually create the plugins or the necessary add-ons to sort of assist you. But again, it goes back to time and resource allocation. I think when you don't give something time or enough resources or enough education within your organization, then you will start to see challenges and breakage because things are not covered, and you know, the robustness of an organization then starts to sort of, you know, wean back a little bit. Yeah.
Brilliant, thank you so much for that. And same question for you, Richard. What are the main challenges facing MTOs regarding compliance?
I think it's interesting hearing Nadeem's view. I think the main challenge that we come across is businesses wanting something that works everywhere. So a global solution. But you know, if you look at MTOs that are in this room, they're from all over the world. Do we have a global solution? The short answer is yes. What does global actually mean? It means we can again come back to the regulators decide that it means something different in every country. So it doesn't keep coming back to that, but it doesn't mean proof of ID, proof of address. It always means PEPs and sanctions. So, you know, are you a financial criminal? Sorry, is your customer a financial criminal or politically exposed? No. Fine, that's the first box sort of ticked. The second box is, are they who they say they are, but how do you decide which method to use? And can you use a global method? So the current approach is to say, well, let's use an identity document to run that approach, and that's fine, but the identity document doesn't give you necessarily all the information you need. You know, so is there a database that confirms that that person lives at their address? And again, globally, there are, but they're different. So in Africa, the way that information is collected is different to the way that information is collected in Europe. So what MTOs want is what we as a business would like to be able to deliver, which is a global solution that just works 80% of the time. But actually that 80% of the time is really, really difficult to achieve, and also to deliver transparency and granularity around that process as well. And that's it, that's the other point. So I think every business in this space is trying to get to that point. And it might be that digital identity takes over before that happens as well. So it's really interesting, but it doesn't deliver from a business point of view. What you want is very hard to achieve as an MTO.
I'm actually going to shuffle my questions around because I think your answer there sort of segues nicely into question 10, which is, does the fact that there are various regulations over multiple jurisdictions impede or enable innovations?
Do you want me to start that? Yeah. I mean, I think it's a challenge, isn't it? So it's a challenge to innovators, and the best positive advice I've heard about that is that the solution for this problem will come because an innovator finds a solution. And arguably the solution is already there, which is digital identity. But Kathy mentioned this earlier, which organisation do we collectively trust to deliver that? Or which combination of organisations? Because everyone should follow. There's a guy called David Birch who's very good at talking about digital identity. And he talks about it in very simple terms. And the one that comes up in the UK a lot is, am I over 18? And his point is, to be over 18, you don't need to know that I live at my address and that I've got 10 credit agreements and I've got a mortgage. You don't need to know that information. You just need to know that I'm over 18 because there's a specific attribute in my digital identity token that tells you that I am. So the technology exists, but there isn't a collection of organisations at the moment who appear to be in position to deliver it. So to your point, Kathy, the UK government won't say it, but essentially they don't want large, they don't want the Googles, Facebooks and Microsofts to own digital identity. But if you look at it, they currently do. So that's where we sort of are with it at the moment. Yeah.
So Nadeem, same question to you, but looking at it more like the sort of full compliance operational side, you being sort of a multi-corridor business. Does the fact that there are various regulations over multiple jurisdictions help or hinder the innovations in the industry?
I think interesting question. For me, it's like yin and yang. Does it impede or does it innovate? And I think Richard said it's a challenge. So we're all different. For me, I would tend to lean to more towards innovating. It's just because every day when we go into work, it's all about facing challenges. So that would be my personal take on it. However, again, going back to what Kathy and Richard, some of the points that they touched on, we now live in a world where you have constant changes and shifts. We have geographical challenges. We have territorial. There's always, again, with what's happening at the moment with the onslaught of updates from regulators, etc. So I think we have to mentally accept it as just being part of our business, and not really look at it that it's going to impede or it's going to affect. No, actually, if anything, you have to sort of raise your standards. And if it's not you, it's actually your competitors that they come out with innovative stuff all the time. And they're pushing the regulators, and they would not see it as a challenge at all. They would actually say that, no, this is something that's going to innovate my business. It's going to create that USP for my business. I will be able to gain more business and grow. So yeah, again, personally for me, I like challenges. So yeah, bring it on.
Excellent. And same question to you, Ibrahim.
I mean, again, it depends on various elements, to be honest with you, but I would still go for, yes, regulations do innovate, or support innovation, I would say, rather than, of course, innovate themselves. They support innovations, and we have seen some use cases here in UK, like open banking, right? That's one major, I would say, game changer, where they came forward and they said, yes, they're trying to address the needs of the consumers. Now, what is important is, of course, a collaborative approach between regulators and the other players in the ecosystem to come up with, something which really, at the end, the goal should be, of course, to protect the consumers and all the participants in the ecosystem.
Excellent. Thank you so much for that, Ibrahim. I'm going to go on to my final question now, but before I do, I'd just like to remind those for joining us online, if you have questions, please submit them via the Q&A button on the right-hand side of your screen. Hopefully we'll get to answer those in a moment. So my last question is going to be for Kathy. What is risk-based approach and how can firms adopt it?
So very simply, since we did a course yesterday on that, risk-based approach is looking at aspects of your product, your geography, your delivery, and determining how it can be affected or vulnerable, and to come up with the areas that will minimize it. That's very short. I hope I covered it, Ibrahim, but you're the expert there.
Would you like to elaborate on that,
I
Ibrahim?
mean, yes, just to add to Kathy, so it's to start with identifying what are the high risks that you have in your business, and then of course you set up the sort of acceptable levels that you can classify those risks into, and then you go into the medium and low risks. So that's how the risk-based approach is. So you start first identifying what are the key risks in your business, and to identify that, obviously it goes back to what's your business model all about, who are your customers, who are your products, in which geographies do you operate, what are the types of transactions you have, what are the services you have, and then from there you will of course apply a risk rating, okay, and you will focus on those which come up with a high risk rating, address those by giving the measures and bring it down to acceptable levels before you move to the other risk categories. So that's in short what risk-based approach is.
Brilliant. Thank you so much for that, Ibrahim. We're going to move on now to our question and answer section of today's session. Before we do, like to thank our speakers. They've done a fantastic job. Thank you so much, guys. And we'll alternate our questions. We'll take one from the audience and then one from hopefully the online audience, and we'll switch like that. So if anybody has any questions I'd like to pose to anyone, please raise your hand, and there we go.
Thank you. My name is Wale. I work with a bank, United Bank for Africa, and as a business-facing person, I want to do business, and from the compliance perspective, the MSBs, IMTOs are viewed as high risk for obvious reasons. You handle payments, you handle remittances, not even arguably, but clearly better than banks. So from the client-facing side, we want to do business. When we try to onboard IMTOs, it's always this challenge, compliance, high risk, blah, blah, those kind of things. So my question is, in your view, what's the easiest way to convince our people? Because from what I've seen here, clearly there's a lot of high-level due diligence, KYCs, the same things that we do that are being practiced by these organizations. So how do we convince our compliance that we can do business clearly with IMTOs? That's my question. First, that's the first question. Excuse me. Then the second one is, from a regulatory standpoint, who has that responsibility in your organizations for monitoring regulatory updates? Who does that responsibility lie with? Is it with the compliance team or the business teams? Thank you.
Okay, so thank you very much for that, to those two questions. We'll start for the first one. I think I'll pose that to Nadeem, because I think in the actual business that Nadeem runs and operates, they do sort of onboard other MTOs. How do you manage that, Nadeem?
So can I just ask if, so you're a new startup and you're trying to set up here in the UK or within Africa? Sorry, just to...
No, we are an African bank,
Right.
already set up in the UK.
Okay.
And of course, trying to grow business. So the brand is an old bank. We're not like new startups per se, but we're just trying to grow business. And we do have a lot of interest in supplying African currencies, locally. So we want to partner with IMTOs to do that.
Okay. I think your second question was a super easy, which was in terms of the updates from regulators. So normally, your compliance team or your COO receives those updates within your organization, and then he disseminates that information to his team. So whether you're having stand-ups, weekly meetings, training sessions, so it's sort of his responsibility, or the ownership or the onus is on him to effectively ensure that the wider team is available, aware of critical sort of updates. Also, again, I'm just going back to maybe the first part. In terms of, you made a reference to, convincing, was it the regulator? For the compliance. So look, regulators give us guidance. Regulators give us this nice little document, and they've sort of established boundaries and frameworks of what they expect us to do. So it's then, again, it goes back to responsibility and ownership. We need to receive that guidance, and then we need to interpret what it is that they require. And again, see it as a challenge. You can go out, there's a wealth of knowledge that you can get access to that can walk you through certain processes, assist you, train you, and effectively then it's just a situation of maintaining. You don't need to go back and convince regulators unless you're applying for a license, in which case you would create your documentation, create your procedures, your policies, submit them for review. So there's an element of convincing, so you need to, there. But apart from that, I mean, guideline is provided, you have the license, then it's just about maintaining what it is that you said in your procedures. I think smaller to medium size, obviously, you're more medium to large in terms of the banking. So, smaller to medium size MTOs, and again, this is maybe prehistoric times. It was just copy paste a procedure and just again put it back into that wardrobe. But I think nowadays we need to be a little bit more proactive and actually understand what it is that we're saying we're doing, because if anything, a lot of times we get stuck on the fact that we're non-conformant, as in we said we were going to do A, but actually we're doing C, D, and E, and those procedures haven't been updated. So if there's an issue with having, for example, local knowledge, you can take external knowledge via consultants, and they will explain that procedure and walk you through that process. I hope that answers your question.
Thank you very much for that, Nadeem. And just to sort of elaborate on the second part, Ibrahim, and let's put a real world example. So a payment's come through, it's been flagged for any particular reason. Whose responsibility is it then to report that to FCA and HMRC? Is it the AML officer? Is it the CEO? Or is it just your regulated staff?
It's normally the job of the compliance function. So it's usually the nominated officer, again, under the supervision of the compliance officer that plays the role to report suspicious activities or report, for that matter, any sort of compliance related issues, the regulatory bodies. Now here in UK, for suspicious activities, it's neither FCA nor HMRC. It's more to do with NCA, which is the National Crime Agency, which is a law enforcement body where you have to report. So you have to register as a firm first and nominate all the users who are officially part of the compliance team, and then you go through the STR process, which is given by them.
Excellent. Thank you so much.
I just wanted to add to the point that the gentleman mentioned from UBA. From my experience, I see that banks, they need to take a calculated risk approach. So it's often like, banks go for a blanket de-risking. And that is actually wrong. So you know that MTOs are high-risk business, but at the same time, you want to bring MTO on board. So you need to take a calculated risk. You need to ensure that you have that risk appetite to take MTOs on board. And of course, you set the criteria to create that comfort level within your compliance team that, okay, we will take MTOs, they are high risk, but what do you require from high-risk businesses as part of onboarding, and what sort of turnovers you can take within your risk appetite. So as far as those parameters are taken into consideration, then you can easily onboard the MTOs. Instead of, you just take an MTO and the compliance looks to it as a high risk and they say, no, we'd rather not deal with this high risk business. Hope that clarifies.
So I was just going to add, of course, in the US, we have challenges as well with banks. And what we've done as an association are a couple things. So we've put together sort of a fact sheet for banks that demonstrate, what the different banking regulators have said. And excuse me, although your compliance individuals are probably well educated on that, these are topics where they've publicly made statements that, if you use a risk approach, money service businesses are appropriate to bank. So just sort of helping them through those guidelines. The second thing we've done is to keep information for them in terms of what's happening on the regulation. What are we doing? And then the third area is we've been trying to do different webinars, like we talked about the AML best practices. So to help them understand what are the best practices that the MTOs are doing. These are not businesses that don't have established procedures. And I think sharing that knowledge is helpful in terms of education. And the last thing I'll say is that the most successful banks that are mid-size and smaller that are banking or businesses in the US have a dedicated money service business division. So that is there are those people that are focused just on sort of the vetting and procedures, and the business development come through that one channel, as opposed to having it distributed, that the senior management knows that it's a very focused activity and they can, rely on that. So those are some of the things that we've done to help that process. It hasn't solved it, but.
Nadeem, do you have to say something?
Sorry, I totally forgot about the MTO element within your question. Just maybe, like Ibrahim mentioned, so once you've created your risk matrix and your risk appetite, we have to remember that when a transactional chain starts to get longer and longer, it comes with various enhanced risks. And especially when payment service providers start to provide further downstream services to MTOs, normally it wouldn't be necessarily the regulator, because the regulator is giving you that guidance and you know, you're all good. It would be things like your correspondent banks, for example, your liquidity providers, and sort of your other key supply chain members that you would really need to go back to and make sure that everything is sort of okay in terms of you giving that type of business. So again, I think maybe to focus on those key elements that you need to have in place to make sure that that business is sort of successfully processed. But downstreaming is like, if MTOs are high risk, downstreaming services from MTO to client is again just going to present furthermore, you know, challenges. So you need to make sure that you have key supply chain members, you know, on board, and just to make sure that there's no operational issues for you.
Brilliant. Thank you so much for that. Arif, should we go to the online audience, please, and take a question from?
Yeah. Good morning to everyone. I'm Arif, and I've got some questions from the online audience. Hopefully a short one to start off with from, I hope I pronounce this right, Ipanti Mbanda. He says, what are your thoughts on compliance by design? So hopefully there's a short answer to that one, but.
Compliance by design, would like to take that one. Anyone? What's your views on compliance by design?
Compliance by design is I think, well, I'm not sure, but I think what he means is the technology delivers a compliant approach to the various conundrums thrown up by compliance. There's an example of that happening in the UK, where they talk about trying to write code that's age appropriate. So to recognise the fact that different ages will be viewing content, and that content needs to, the way the experience of the user is designed. TikTok's a good example, as in it's not age appropriate, but you know, when your kid's scrolling through images, are you getting the images and the content that you should be getting based on your age? And it's possible to deliver that. And from a compliance point of view, there are businesses out there who are trying to do that. But it's essentially, it feels like it's trying to use AI to deliver a compliant process, when compliance is a bit more than that. It's about a risk-based approach. So I guess the short answer is yes, it could be, but does that mean it's going to be a risk-based approach based on the industry that it's being designed for? So if you know, there's a technologist there who would take that on, I'm sure. I've not come across it in reality personally, but you might know something about that. Or like the challenge.
You know, the short and sweet questions, sometimes they're actually very bland, so it's difficult to maybe pinpoint exactly compliance by design. So look, it's a set of rules and regulations that we create, and that's created within a wider framework, and then to actually stay compliant, and I think Richard sort of summed it up quite nicely. So we create this risk-based approach, and then whatever it is that you're going to create, implement, improve, is sort of done with the mindset that those rules, guidelines, you know, and you have to stay compliant. So it's just an additional factor that you would factor in whenever, whether it's creating or designing new tech, and just following what it is you said. So I made a promise today. I need to make sure that, you know, I keep my promise effectively. That's the babyfied word, or the way. Sorry.
Do we have any other questions from the audience? Should we go back to the online audience? Okay, another one from the online.
Yeah. Question from David Lambert. In a world where data is hacked all the time, is the reluctance from the UK and US governments to tokenize or digitize KYC justified? As in, does making KYC data so easily available to online scammers and fraudsters, are we creating significantly more risk?
Well, the data is already available, I guess is the point. You know, the data is an individual's name, address, date of birth, identity documents. Every time organisations get hacked, that becomes available. So that's already the currency of KYC. That's broken. And so it's important to have a layered approach to running KYC in the same way. If you think about fraud, fraud is not just, here's a piece of software that's going to stop all my fraud. You need multiple solutions to run in that space. This is an ongoing debate. US and UK governments are scared of that, but equally, non-US and UK governments are also scared of that as well, but they've still pushed ahead with it. So it's just, it's a massive question, but in simple terms, that's the data that's currently being used, and some angles that data is being discredited, but for the vast majority of low-risk organisations, that's exactly what they'll be using to do KYC. And so if you want more security in that process, that cost gets loaded onto, in our world, cost gets loaded onto MTOs, so there's a balance there. How secure do you need the process to be to do what you want to do? And if you're sending money as a consumer, you want to make sure that money gets to where you want it to get to and costs as little as possible. So there's a balance, isn't there? It's a good question. Yeah.
Anyone else like to add on that?
I just would like to say in some of these questions with the technology, I think that they are helping us to solve the problems that we need, but they're not exclusive in the answer. And I think that people sometimes forget that you need the human to sort of define what the scenarios are, to review the scenarios in AI, to continually improve upon that process. And I have had conversations with people who think that technology can sort of do everything, and that will make everything simple, and the compliance will all of a sudden drop because there's not a need for the support and review. But maybe I'm too mature in my age to be that big a cheerleader for technology. I think it's a crucial piece of what we're going to do, but it will not be able to do everything for us.
You're quite right. It can't answer every question. It's a bit like, if you have children and you want a babysitter, do you go, I'll just go online and get a babysitter? You don't, do you? You go, I'll take a risk-based decision that this person is okay to look after my children. And it's the same, 20% of clients, potential clients, you need to do some due diligence on them that the technology can't deliver. So.
Okay, brilliant. Thank you so much. That's a really interesting topic, I think. I have another question from the online audience. If you don't mind, please.
Yeah, so this one's, again, a bit more technical and related to the technology behind what we're doing. So from an operations and compliance perspective, is a SaaS model better than an on-premise or self-developed model? What are the pros and cons of each?
So I'll sort of hopefully start from this. When you're looking at a software partner or a software provider, there are sort of two main roads or channels that you can go down. You can go down the sort of SaaS model where you're essentially renting the software from that provider, and obviously the data is always belongs to the MTO. That provider does not. I mean, particularly in the UK, we have data protection laws and things like that. So that data will always belong to the MTO, but the system itself, the software itself, will be rented. And for the full SaaS, the real advantage to that is that the MTO will generally take ownership of a lot of the infrastructure and the security that comes around that. So if we're talking about sort of having a secure server set up with firewalls, and then having a disaster recovery or a business continuity server on another location somewhere. So again, God forbid if London burns down, then you've got one in Manchester that can sort of kick in straight away and you have your sort of business continuity there. So I would say that's probably one of the main sort of benefits of going for the full sort of rental or SaaS, where again the software provider is sort of handling a lot of the security side, a lot of the cyber security side, a lot of the infrastructure in place for you. Again, without particularly sort of SMEs to sort of smaller companies, they might not have the staff or the expertise in place to sort of have those sort of barriers put in place to a high standard where not only is the FCA going to be happy, but your business is safe. So that's something you actually pass on to the headache that you can pass on to the tech provider. Going for the sale or a sort of a sale model, usually what that entails is you'd buy a software from a software company, either with or without source code. Sometimes they do come with them, sometimes they come without. But then they would generally deploy it on your own infrastructure and your own servers. Now, obviously, that comes with, again, more responsibility for the MTO. Main advantage on that side would probably be long-term costs. If you are doing sort of very sort of high volumes of transactions, smaller transactions, high volumes, a lot of the tech companies will probably be sort of charging you around the usage of the system, so it's going to be tied to that in some sort of way. If you're doing sort of high volumes and for a long-term sort of business, it's probably better off that you again purchase the software and then manage the server infrastructure yourself, where again you're not going to be probably paying out as much to that tech provider. So that's sort of pros and cons of each, I think I would say.